Assalamu alaikum class. Welcome to today's lecture. And in this lecture, we will discuss the calculation of total manufacturing cost, total cost of goods manufactured, and the cost of goods sold. And we will complete two exercises from Managerial Accounting by Ronald Hilton, edition 8. So let's begin. While making the schedule of cost of goods manufactured, first of all, we need to calculate the cost of raw material used or direct material used. So you can see that the computation in which we have raw material inventories. We have two type of inventories: raw material opening and raw material closing. So we add raw material opening inventory with the cost of purchases of raw material to get raw material available for sale, and then we deduct raw material closing inventory. So in this way, we calculate the cost of raw material used in the production. So here this amount. This cost of calculation of cost of raw material will be shown separately or in workings, and the direct we take the amount of raw material in the schedule of cost of goods manufactured. So you can see in the schedule of cost of goods manufactured, three main element of production combined or a part of manufacturing cost. So here we have raw material, which is direct material. Then we have direct labor, and then we have manufacturing overhead. And by adding all three, we get total manufacturing cost. So first, most important calculation is to calculate total manufacturing cost. In most of the cases, total manufacturing overhead or MOH is given, this one. And if MOH is not given, then we have to calculate it in this way. Like you can see uh, here, it is computation of manufacturing overhead. We we have discussed in our previous lecture that all indirect factory cost is a part of total manufacturing overhead, like indirect material, indirect labor, depreciation on factory equipment, plant, utilities, insurance. All these are part of manufacturing overhead. So if manufacturing is not given, then we will have to calculate it. So after getting total manufacturing cost, we add work in progress or work in process opening inventory in manufacturing cost, and deduct closing work in process inventory in order to get cost of goods manufactured, which is 415,000 in this example. Then uh, while calculating cost of goods sold, you can see that um, here we have the pro forma of cost of goods sold. Here you can see the we add finished goods opening inventory in cost of goods manufactured, and then we deduct finished goods closing inventory in order to get cost of goods sold. So you can see here we have cost of goods sold. The format of income statement is same, that is, we have sales, then we deduct cost of goods sold to get gross margin, and then we deduct selling, admin, marketing expenses in order to get income before taxes. Then we deduct income tax expense in order to get net income. So that's it. These are different performas, and we will practice it with the help of Excel sheet. Here we have Excel sheet, and problem or exercise is 2-29 from the book Managerial Accounting by Ronald Hilton. So here you can see the problem. In this problem, what are given? First of all, the manufacturing company here, three inventories are given: raw material, work in process, and finished goods. We have opening inventories, and we have closing inventories. Then the company purchases. So purchase are given total purchase of raw material, and total amount of direct labor is also given. Then manufacturing overhead cost is given. You can see that indirect material, indirect labor, depreciation, utilities, all are manufacturing overhead. These costs are given. Then sales is given, selling and admin is given, and income tax rate is given. And what is required? First of all, cost of goods manufactured statement or schedule of cost of goods manufactured required. As we have just discussed that, first of all, we have to calculate total manufacturing cost. And for total manufacturing cost, three main elements are required: raw material or direct material used, direct labor, and manufacturing overhead. So this means that in very beginning, or the first step is to calculate direct material cost or raw material cost. So we are going to calculate direct material cost. So direct material cost, in we have raw material, raw material, opening inventory, we add purchases in it to get raw material available for use. Then we deduct raw material closing inventory in order to get raw material used, which is also called direct materials. So here we have raw material opening inventory. It is given here. Start of the month is the opening inventory. Here, this is opening inventory. Purchases are also given. Then this December 31st means this is closing inventory is given. So raw material opening inventory is $60,000. Here we have the amount of dollars. Then we add purchases, $60,000. Then the amount of purchases is 250,000. We add both of the amount, and then we will deduct raw material closing, which is 70,000. So the raw material use would be $240,000. So this is our first working or first calculation. We have calculated raw material used or direct material used. Now the second step is to calculate total manufacturing costs, or you can say we are going to prepare schedule of cost of goods manufactured. So in a schedule, while making schedule of cost of goods manufactured, we need direct material, direct labor, and MOH. So we have direct material used, which we have already calculated. Here we have direct material used. Then we add direct labor and add MOH, or you can say uh, manufacturing overhead. In order to get total manufacturing cost. Total manufacturing cost is also called product cost, total product cost, or total factory cost. So here, direct labor is also given. So we have direct material use, which we have calculated, is $240,000. Then direct labor is also given $400,000, and manufacturing overhead is given separately, or you can say one by one. So we will have to add all these. You can see indirect labor, indirect material, and all these things are given. So we have indirect material, indirect labor, depreciation, utilities, and other and manufacturing. So when we add all of these, means 10,000, then we add 25,000, then we add 100,000. Then when we add 25,000, and in last we have 30,000 of other MOH. So 190,000 is your total manufacturing overhead. So by adding all these three, we get total manufacturing cost, which is 830,000. So this is your first calculation, which is total manufacturing cost. We can write it differently. Okay. And in outer column. Okay. So by adding all these three, we get total manufacturing cost. Then we will add opening inventory of raw material, and then we will deduct closing inventory of raw material from total manufacturing cost. So we will add work in process, opening inventory, we get total cost in process, and then we will deduct work in process, closing inventory. Here we will add. So work in process, opening and closing inventory is given. You can see this is the process, work in process inventory. So this is opening inventory and this is closing inventory. In order to get total cost of goods manufactured. Now the opening inventory is 120,000. So we add both of these. We add opening inventory with total manufacturing cost, and then we will deduct closing inventory, which is 115,000, in order to get cost of goods manufactured, which is here you can see uh, 80 $835,000. So this is our next calculation, or this is our second important calculation. So, and with the help of this calculation, with the help of cost of goods manufactured, we can calculate cost of goods sold. So the next step is to calculate cost of goods sold, and this is from the calculation is from the cost of goods manufactured. We will continue from this amount. So now we are calculating cost of goods sold. So cost of goods sold, or you can say it can be schedule of cost of goods sold. So While calculating cost of goods sold, we take finished goods inventory opening, then we add cost of goods manufactured in it in order to get cost of goods available for sale, and in last we will deduct finished goods closing inventory. So we will get cost of goods sold. Now, finished goods inventory is given. You can see here 150,000. This is opening inventory, and 165,000 is our closing inventory. So, opening inventory is from data which we have given, which is 150,000. Then we add cost of goods manufactured. We have already calculated it, which is 835,000. So we add all these two. Then we deduct finished goods closing, which is 165. So $165,000. This is $165,000. So our total cost of goods sold would be 820. The last calculation is to prepare income statement. So for income statement, there are three main headings are required. First of all, the name of the company, and the name of the company is, this is Alexandria Aluminium Company. So we will write it the name of the company. Income statement, and this is for the year ended December 31st. The year is given or not, let me check it. 20x1, so it is for 20x1. Okay, so format of income statement is we have sales. So sales is given, the amount of sales you can see, 1105,000. So sales amount is 1105,000, and from sales we deduct less cost of goods sold, which we have calculated this one. So we deduct $820,000 in order to get gross profit. So our gross profit would be, you can see the gross profit is 285. Then we will deduct selling and admin expenses, which are also given, which is, you can see, $110,000. So we will deduct it, $110,000. The next thing is income before tax. So our total income before tax would be 175. Then we will deduct tax, income tax expense. Income tax expense is, tax rate is 40%. So income tax expenses or tax expense is 40%. And we can calculate it as minus 40% of income before tax, which is 175,000. So after deducting tax expense, we get net income or net profit, or which is called profit after tax or net profit after tax, and it is $105,000. So this is our calculation of, you can see, income statement. We prepare in this problem, we prepare all three requirement, prepare schedule of cost of goods manufactured. So here it is a schedule of cost of goods manufactured. Before calculating or preparing schedule of cost of goods manufactured, we need to calculate total manufacturing. We add all these three: material, labor, overhead, for manufacturing cost. And then for material used, we have this calculation: raw material opening inventory, add with purchases, and then deduct raw material closing inventory. So that's it. This is exercise 2-29, and this is our last practice question for um, this lecture, and this is problem of 2-38, in which we will have to calculate factory or manufacturing overhead. So manufacturing overheads are not given. Then we will prepare cost of goods manufactured, cost of goods sold, and then we will determine net income by preparing income statement, and also determine the number of completed units manufactured is required. So these all are the requirements. So the first requirement is to prepare manufacturing overhead, or MOH, or you can say factory overhead. So here miscellaneous data is given, and we can see that um, raw material purchase is not the part of manufacturing overhead. So first, what we are going to calculate? First requirement is to calculate total manufacturing overhead. So for total manufacturing overhead, you can see direct raw material is not the part of manufacturing overhead. Direct labor is also not the part of MOH, but indirect labor is a part of MOH. Selling and admin expenses are operating expenses. Building depreciation is generally a part of MOH, and it is a small asterisk, means that there is a description. You can see that 75% of the factory's building was devoted to production activities, means out of this total depreciation, 75% become the part of MOH, whereas 25% is a part of selling and admin expenses. And other selling and admin expenses are given, and other factory cost is given. So other factory cost is also a part of manufacturing overhead. So this is our first requirement. Here we have indirect labor is given. We have indirect labor. Then we have building depreciation, and then we have other factory cost. So indirect labor, how much indirect labor is given? You can say it is 109. So indirect labor is here. Third one. This is indirect labor. This is building depreciation, and other factory cost is also given. So by adding all these three, we will get total manufacturing overhead. So indirect labor is 109,000. Then we have depreciation, and we have just discussed that 75% of the building is used in manufacturing of goods. So we take 75% of total building depreciation, which is 80,000. So 60,000 is the part of manufacturing overhead, and other factory overhead is 344,000. So by adding all these, we get total overhead. So this is our first requirement, is the calculation of total overhead, total manufacturing overhead or total overhead. Oh, second requirement is to calculate the cost of goods manufactured. So now we are going to calculate the second requirement, cost of goods manufactured. So for cost of goods manufactured, first thing is required, first thing which is required is raw material used. So raw material used is not given. We will have to calculate it. So I am going to calculate it separately in workings, which is direct material used. We have raw material opening. Here you can see we take raw material opening inventory, then we add purchases in it in order to get raw material available for use. Then we will deduct raw material closing inventory in order to get what? In order to get direct material use. So for this calculation, we have opening and closing inventory of raw material, which is given. You can see January 1st and December 31st. This is 15,800. So 15,800 is your opening inventory, which is 15,800, and closing inventory is your 18,200, and purchases are total given. Raw material purchases, you can see 175,000. So we have we added 175,000. So when we add these two, we get raw material available for sale, and then we will deduct closing inventory in order to get raw material use. So our total raw material used is $172,600. So this is our raw material used. So while calculating cost of goods manufactured, we need raw material or direct material used. Then the second thing which is required is direct labor, and the third thing is manufacturing overhead. So raw material use we have calculated, which is you can see it is 175,600, which we have this one. We have calculated it, and direct labor is given. You can see here it is $254,000. So $254,000. And we have also calculated manufacturing overhead, which is 513. So we take 513,000. By adding all three, we get total manufacturing cost. So total manufacturing cost would be, here it is the total. So it is $942,600. So this is our, you can say, total manufacturing cost. So we take it in the outer column. Um, this is 172,600. So this is 172,600. Then next step is to add work in process, opening, opening inventory in order to get total cost in process. And then we will deduct work in process, closing inventory to get cost of goods manufactured. So work in process opening inventory, you can see 35,700 is given. So 35,700 is given. We add both of these to get total cost in process, which is then we deduct closing, which is 62 minus 62, 62, 100. So the cost of goods manufactured would be here 913, 913, $200. So this is your cost of goods manufactured. This is the requirement number 2 to calculate cost of goods manufactured. The requirement number 3 is to calculate cost of goods sold or compute cost of goods sold. So now in requirement number 3, we are going to calculate cost of goods sold. So in cost of goods sold, we use third type of inventory, which is finished goods inventory. So here we have finished goods opening inventory. We add you can say cost of goods manufactured. By adding these two, we get total cost of goods available for sale. And in last, we will deduct finished goods closing inventory, then cost of goods sold. So finished goods opening inventory is given, which is 111,100. So we start from 111,100. Then we add cost of goods manufactured. We have calculated it in the previous calculation or requirement, which is 913,200. So by adding these two, we get cost of goods available for sale, which is 102,4,300. And in last, we will deduct finished goods closing inventory, which is minus 97,900. So here, this you can see. So by deducting, the cost of goods sold would be 926,400. So this is our third requirement, 926,400. The next requirement, requirement number 4, is to prepare net income, is to calculate net income. Obviously, we calculate net income by preparing income statement. So income statement, we have sales, we will deduct cost of goods sold in order to get gross profit. Then we will deduct selling and admin expense. Then we get income before tax. Then we have income tax? In this problem, we do not have any income tax. Let me check it. The rate of, yes, income tax rate is given. So 30% income tax rate is given. So we have income before tax, then we deduct income tax, you know, and we will deduct income tax. So the final, we will get net income. This is our requirement. So sale amount is given, sales is total. You can see sales revenue 1,495,000. So sales is 1,495,000. We will deduct cost of goods sold, which is 926,400 in order to get gross profit, which is this one. And then selling and admin expenses, which are also given. We have, you can say, selling and admin expenses directly is not given. We will have to calculate. So we calculate it in the workings. You can say this is your working one. Now, working two, calculation of selling and admin expenses. So you can see that selling and administrative salaries are there. So it is 133,000. Then we add building depreciation. We have added 75% in the MOH and 25% in the selling and admin. So total depreciation is 80,000. So we take only 25% here. So this is the depreciation. Other selling admin expenses are also given, which is 195,000. So by adding all these three here, these are the total amount of selling and admin expenses. The total is not given. That's why we have calculated in the rough work, or you can say in the workings. We showed it in the working. The total is 248. So here the amount is, we will deduct is, so this is $248,000. So income before tax would be 220,000. So it is 133, 248. This is a 348. The amount is 348. So this is 348. So this is profit before tax. Total tax is 30%. So we are going to calculate 30% of what? 30% of income before tax, which is 220,600. So now we will deduct this from the profit before tax. So the net income would be, here it is. The net income is 154,450, $420. So this is our total calculation. This is, here you can see the calculation of income, net income, and here it is the pro forma, proper pro forma. So all amount should be in dollars. So here it is a dollar sign, and then you can see the answer. One requirement is also remaining. Determine the number of number of completed units manufactured. So, we have a total units sold, and calculate it in this way. We have units at start, we add units completed or units produced, and then we deduct units at end. So we have given total number of units sold. So total number of units sold, you can see that $130 per unit. So sales are total 1495. So here in the rough work or insight way, we can calculate unit sold. You can see that we have a total amount of sales are 1495,000 divided by per unit, uh, one per unit sales price. So you can calculate in this way number of units sold, which are 50, which are 1115. So units sold are 11,500. On the other side, total finished goods inventory units are, you can see, 1st January means unit at start are 1350. Then we do not have units completed, and then we deduct units at end, which is 1190. So 11,500, then we take these two amounts on the other side of the equation. So you can see 1350, and then we have 1190 on the other side. We have units completed or manufactured. So you can calculate this as well. This is our last requirement. So units completed are total, or units produced. The other name is units produced. So total units produced are basically one 11,340. So total, the company produced total units 11,300. So that's it from this problem and this lecture. In the next lecture, we will discuss how to calculate manufacturing overhead, the third element of the total manufacturing cost. And it is very important to know what elements comes in the total overhead. So that's it from this lecture. Take care, class.